Hey everyone, this is Robert Keens at goldsilverpros.com. It is Wednesday, January 6, 2021. Hope you guys have had a fantastic start to the new year. I'm going to be covering a subject today that a lot of people have wanted me to do for quite a while. I wrote about it years ago, but I haven't really covered it on the YouTube channel. So we're going to get into that. And a couple of questions are, first, do we have too much gold, and how has gold production compared to very recent fiat money printing? I don't think it's going to be a surprise to anybody, the answer, but I wanted to bring you some statistics. And second, more importantly, assuming that we're going to have an upcoming recession, I think we're already in one, but an official recession, given all the money printing and the lockdowns and the lack of growth of GDP, how do gold and gold stocks do during a recession, specifically when compared with the S&P and the performance of the overall stock market? There seems to be a lot of confusion about this topic because I think a lot is printed, and a lot of it's printed by mainstream financial media that don't do a good job of analyzing this. So I went back and did quite a bit of research. We're going to show you research that I found from various reports, as well as a little bit of research on the charts that I did myself. Let's go ahead and jump into that. I think you're going to like this presentation today, especially those of you who own gold and gold stocks. So I wanted to start off with a wonderful visualization by Visual Capitalist. If you guys have never seen this site, they have just the most wonderful visual presentations. They're chock full of lots of helpful information. So we're going to start with one that they published on October 15th of last year called The World's Gold and Silver Coin Production versus Monetary Creation, or Money Creation. So right off the bat, we get into total production per person. 2019 silver coins minted amounts to 23 cents per person in the world, and 2019 gold coins minted $1.42. So if you're a person in this world, you're one of the 7 billion people, only 23 cents of silver was created for you and only $1.42 of gold. So despite all of the production we've had this year, it has not amounted to very much when you consider the amount of population that we have. Contrary to that, in 2019, the value of new global money supply was 390 times higher the value than new gold coins minted, to the tune of $556.33 per person, based upon US, China, the European Union, Japan, and England. So you can see here, this is monetary creation. This is silver and gold in comparison. And apparently they like to draw their maps to scale, so I'm assuming this is all to scale. So as you can see, there's been relatively little gold and silver production in 2019 compared to fiat money production. And if you look here, they have a nice little chart here on the right as well. 44,000 increase in global money supply per 1 ounce of minted silver, and per 1 ounce of minted gold, $593,000 increase in global money supply. So if we were taking just the amount of gold printed this year versus fiat, gold should be $593,000 an ounce just for 2019. And if we're looking at silver, silver should be $44,000 an ounce, of course, just for 2019. We're not counting on existing above ground stocks of either metal, but that just gives you an idea of the scale of money printing that has occurred above and beyond that of the precious metals. So precious metals, the lesson there is precious metals are definitely more valuable and more scarce than fiat money. I've seen recently, I was disturbed to see a major gold supporter come out and talk about how much gold there is and there's too much of it in the world. And I thought, ooh, I really have got to kind of rebut that with some decent statistics, and Visual Capitalist has done a good job of that for us here. If you look down here, change in annual production, there's only been a 2% increase in minted silver coins this year. There's been 14.4% increase in minted gold coins, I think because of demand and because of prices. Compared to a decade ago, annual money issuance increased by almost half. It was up 45% over the year. So again, if we're looking at not only gold and silver, but specifically investment coinage, the money printing is a lot more than either the gold coins or the silver coins. The global money supply 6.8 trillion and this is for in the first half of 2020. I think at the end of 2020, it was somewhere around 10 trillion versus minted gold coins. It was some number above 7.3 billion, but again, still a fraction. So if we bring it to the end of the year, the relationship is basically the same between the amount of gold and the amount of money supply. So from January to June 2020, as we see right here, the increase in global money supply was over 930 times greater than the increase in gold minted coins. So again, what's more precious, gold, silver, or fiat? Well, it's gold and silver. They have some nice tables here from 2019. It says down here, 2019 production global gold coins were 7,204,000 ounces at a value of 10.9 billion for an average of $1.42 per person in the world. Again, if you took all the gold mined in 2019 and produced in gold coin form, it only amounted to $1.42 a person. And the average 1 ounce gold coin is going for about $1,900 today. Last year it was going for quite a bit less than that, but it was well over 1,000. But it's only $1.42 a person. So they're not printing a whole lot of gold per person in terms of investable coins. Global silver coins last year was 97,900,000, almost 98 million, for a value of 1.8 billion in 2019 dollars, and that was 23 cents a person. So if you were an investor looking to invest in gold and silver coins were very scarce when compared with the amount of people and the amount of fiat printed, whereas the global money supply in 2019 was 4.3 trillion, and that was $556 per person. Change in annual production 2019 versus 2010. So here's a look back to 2010. In 2010, there was 95 million global silver coins, 2019, 97 million. So contrary to popular belief, we're not mining a whole bunch more of gold and making them into investable gold coins that we did 8 or 9, 10 years ago. It was only a 2.1% change in the increase in available, that's silver coins. And silver coins between 2010 and 2019. It was more for gold between 2010 and 2019. It was an increase from 6.2 million gold coins to 7.2 million. And so it was 14.4% increase. Of course, nowhere near the amount of monetary creation, the global money supply in USD, 2.9, I believe, trillion 2010, 4.2 trillion 2019. That's a 45.4% increase. So wonderful numbers to show how much more scarce the gold mined is and the amount of gold and silver coins minted are compared with the amount of money issuance. So if you're wanting to look at trends as to whether regular fiat money is going to hold its value or whether gold and silver coins are going to hold their value, I think it's absolutely clear it's gold and silver coin. But wait until we get later in the presentation, we start talking about availability of gold and silver moving forward. We have some really good statistics for you guys. It's going to get very, very interesting. And I think it bodes well for the bull market case in both the bullion and in the stocks. I found an interesting chart here from ourworldindata.org, a nonprofit that does various research on a lot of things. They did a nice little gold chart here from 1681 to 2015. The first thing that really stands out is until about 1850, relatively speaking, there wasn't a huge increase in gold production. Then from 1850 on, we had a big increase. Now, I didn't graph it here, but if you look at population boom, you'll see a very similar population boom. Because from about 1850 to now, the gold production has mirrored pretty darn close, with some slight short-term exceptions, the overall increase in population. So even though we've had a lot more gold production overall, as you can see on this chart, it hasn't dwarfed population, meaning pound for pound or ounce for ounce, however you want to do it, the amount of gold available when compared to population has remained relatively stable over that time period. But there has been an explosion in the amount of gold produced from 1681 to 2015 that does mirror the population. Of course, you can see these trends here, these ups and downs that seem to follow a pattern. I'm going to show you that in the next set of charts. A really interesting piece of research that's printed out over at ResearchGate by Michael Thompson, who's the CEO of a research company, shows that there is a predictable pattern about every 30 years of gold production. We're going to get into that chart next. So we're here, and an article is printed in September of 2016 by Michael Thompson. He's the CEO of, I don't know how to say this, but I'm going to say TIEX Limited and Advanced Rare Earth Research. And it's called, Are We Now Approaching Peak Gold Production? New Gold Discoveries Are Not Replacing World Production by Michael Thompson. So we're going to get into some of the text, and then we're going to get into the charts. So we're going to start right here. World gold production, 30-year periodicity, sorry, I can't say that word. From the data presented figure 1, which we'll get to here in a moment, one can interpret an almost precise 30-year periodicity in gold production peaks, i.e. 1910, 1940, 1970, and 2000. Interestingly, each 30-year cycle begins with an approximate 10-year drop in production, followed by a subsequent 20-year rise, in which you reach the peak for that 30-year, essentially. One might then project that gold production will increase to a new peak in the year 2030. This graph suggests this, but gold discovery rates may not. Now, this sentence is what I'm going to bring you some additional research and really highlight why he's correct here. A piece that was done by another firm here at the very beginning of 2021 supports his thought that gold discovery rates may not support a new peak in 2030. He goes on to say, it is proposed that this upward trend in world gold production is about to be broken and we will reach peak gold shortly. The reason, truly world-class gold discoveries are not being made at a rate that will replace reserves and gold production as in the past. In the end, gold exploration discovery rates will dictate the price. Historic gold deposit exploration models and new unconventional models will either provide more ounces or not. Consider the following. Now, I'm going to continue reading in this about another page or so, but it may seem boring to a lot of you, but it's really, really important if you're an investor to understand this, to understand the past mines that we found, deposits we found, and what we're finding now. And we're going to show you some additional research on the money going into new discoveries. And it's really going to paint a picture as to why we're about to hit a massive global market, and silver, I think, as well. So we're going to continue. So stick with me on this. It will pay off at the end, I promise. Down here, as a brief review, these are the significant regions that set the world gold industry on an upward path in the 20th century and highlighted the Witwatersrand Basin gold, greater in size than nearly all other world gold deposits combined. That's a past gold finding that produced for a long time, and I'll show you a chart on that here in a moment, which shows that it hasn't been. And that was the last sort of mega gold find. There's been some other pretty good gold finds, but we haven't replaced the past Witwatersrand Basin gold with another one just like it. That's key. And you'll see why here in a moment. There also was the California and Yukon, Alaska gold fields, the Canadian and Australian greenstone gold belts, the Homestake lead South Dakota gold, the Bingham Canyon, Utah porphyry copper gold, and the Cripple Creek, Colorado gold. So those are some of the previous big finds. You go down here to this paragraph. The single most important gold district in the world is the Witwatersrand Basin, which we just talked about, which has produced 40% of all the gold that has ever been extracted from planet Earth. 40%, one deposit or one district. South Africa production from the Witwatersrand peaked at 1,000 metric tons in the year 1970. And we'll get to that. That was 50 years ago. We'll get to that when we look at figure 2. A level that will never be seen by a single country again, according to Michael. Will another Witts-sized district ever be discovered somewhere in the world that holds that much gold? He says the answer is simply no. The Witts gold system is a truly one-of-a-kind geologic anomaly. The fact in itself underpins the peak gold projection, but he's going to give more data moving forward. The largest gold deposit districts currently in production include Grasberg, which is run by Freeport-McMoRan in conjunction with the Indonesian government, which I've covered before. I wrote an article on Freeport-McMoRan, I want to say in 2019, covered that and the Grasberg mine in depth. That's over at Seeking Alpha if you guys want to go look. There's the Muruntau and Limpiata, they're Russia gold. I'm going to butcher some of the name, but I'm going to try my best. Yanacocha, which is in Peru. The Carlin Gold Strike Post Bets, which is Nevada disseminated hosted gold. Now, remember from a report I did earlier, probably a couple of weeks ago, Nevada is 78% of U.S. gold production and represents 3% of world gold production. This is pretty big. The Shandong province in China, the Veladero in Argentina, the Lagunas Norte in Peru, the Lihir Island, PNG low sulfidation gold, Kalgoorlie district in Australia, Pueblo Viejo in the Dominican Republic, and the West African greenstone gold belts. Those are the largest ones currently in production. Now he goes on to say the Carlin deposit, first discovered in the 1960s, is a unique geological model and mineralized trend. Douglas Cook coined the term golden 80s. It's a decade when the northern Nevada sediment hosted disseminated gold deposits as a group became world class. Will another belt of this type and size be found somewhere in the world? Even though many have explored for it, another belt of this size is not likely to be found. Last paragraph we'll go through here. The largest gold producer in the world today is actually a porphyry copper mine, the Grasberg. That's the one run by Freeport-McMoRan in Indonesia, which I covered in 2019. Interestingly, this deposit was first discovered and described by Jacques Dozy in 1936. Freeport recognized Grasberg in the 1970s as a porphyry copper gold system, but assumed its grade would not be higher than the copper skarns being mined in the Erzberg district. After all the skarn targets were evaluated, the Grasberg was finally drilled in 1988 with spectacular results. Quite an interesting history to the largest gold mine in the world today. Porphyry copper gold systems will always be very important. So we're going to skip down here to the new and undeveloped major discoveries. So we do have some new undeveloped major discoveries, but they don't match the Grasberg or the Witwatersrand. And that's what's important. You have the Oyu-Tolgoi, the Rico Deek, the Donlin Creek, Las Cristinas, Sukhoi Log, Olympic Dam Copper, Timok, Fruta del Norte. Those of you who follow me on O&M's channel, O&M Partners does presentations for different mineralized companies. I do town halls for them or opening 10-minute introductions for them. I did one on Ecuador and the resurgence in the Ecuador mining sector, and I covered Fruta del Norte. I'll try to link that down here in the description for if you guys want to go over it. It's about 9 minutes long. It's a really good overview of Ecuador and Fruta del Norte. There's been a resurgence in Ecuador for mining overall for the first time in about 40 to 50 years. And they're also bringing back some ancient mines that were mined in the 1600s, 1650s, bringing those back into production as well. That's really interesting. I'll link that video for you guys if you want to follow that. There's the Western Pacific, the new high sulfidation gold and gold-rich corporate coppers that are being found all over the world, new greenstone belts of Chad, Shandong subsea gold, and metalliferous black shells. Now, the sulfidation gold and gold-rich porphyry I talked about in Monday's video when I went over silver dollar resources. They have a couple of projects up in Canada which are sulfidation, and they're looking for sulfidized gold. If you see a project looking for sulfidized gold, chances are it has the potential to be a major discovery because that's the type that are being found. Now, onto the charts. This is finally figure one. You guys have been waiting for me to read through all that. Figure one is where we get to the 30-year cycle. It's very interesting, this research that Michael did since 1900. You see the total 30-year peak, which is represented by the blue line, the 10-year decline that starts off each 30-year period, which is in green, and the 20-year, which is in yellow. And you can see almost like clockwork, 10-year decline, 20-year increase, 30-year peak. 10-year decline, 20-year increase, 30-year peak. 10-year incline, 20-year increase, 30-year peak. Now, notice here that we had the biggest increase from 1970 to 2001. That's because you had the Witwatersrand and then eventually the Grasberg, which came into play after in the late 80s, 90s. And then now we've had our 10-year fall from 2000 to 2010. And again, we started our 20-year peak. So the big question is, will we finish our 20-year peak in 2030? And then what happens after that? Boy, wait for the data I have to show you. This is going to be explosive if you're an investor in gold or the gold stocks specifically. We're going to drop down here to figure two, and this is the top 5 gold producing countries since 1960. Notice South Africa with the Witwatersrand peaked in 1970, as Michael had illustrated up in the text, and it's fallen from a peak of about 1,000 tons down to current production under 200 tons. And all of the increases for the other major producers, China, Australia, USA, and Russia, have not made up the difference. If you look in the increase since 1970 to now for all of these countries, it does not equal to 1,000 metric tons. In other words, we have not increased. The other 4 prolific producing countries have not increased enough gold production to keep up with the decline in just the Witwatersrand. And remember, Witwatersrand provided 40% of gold for the entire world ever produced. That's major, major news. Major news. This is a great report. You guys go and look at this report. It's got the URL here. You can just search researchgate.net and look at the title, Are We Now Approaching Peak Gold Production? So I think we've proven at this point that we are near peak gold given current discoveries, or have we? Well, I've got some additional research to show about where we are on current gold reserves and how much money is going into new discoveries. And it becomes worrying if you're worried about peak gold. It becomes really cool and bullish if you're invested in the gold explorers specifically. Remember, I've been talking about the explorers for the last few months and focusing on them. This is why. This presentation I'm doing today is going to show you why I'm doing that. Crescat Capital in the beginning of this year, January 2021, put out this amazing research study. It is the Precious Metals Fund, January 2021. You can find it by going to crescat.net right there. It's a 47-page report. We're only going to go over a few of the exhibits here, but they've done a great job, and I want to give them full credit for that. Please go download this report. It's completely free. I didn't have to give my email or anything. It's right off their website, Crescat Capital or Crescat.net. They're talking about here the gold supply cliff. They say that the majors have underinvested in exploration and must replace the reserves. Supply shortfall, a macro positive for gold prices, extremely bullish for junior explorers. Again, what have I been saying? Find the junior explorers, not only in gold, but in silver. So according to Michael Thompson, we should reach peak gold production in 2030. And then we're going to have this massive fall in available reserves. That fall is so big that I think it's portending more than a 10-year drop that we saw in his chart. So we tend to have this 10-year drop every 30 years, which is this green line. So at 2020, we would have a 10-year drop going down to 2030, but I think it could go past that. We'll see that when we get into some of the further exhibits that Crescat has provided for us in their research. But we do have, in terms of the total reserves, a cliff which starts in 2027, actually starts in 2025, but really starts to drop off in 2027, 2028, and goes down for another 11 years. And research shows that we're not putting enough money into discovering new reserves. Remember, Michael said we're not finding the big ones. Okay, the largest gold deposits currently in production don't equal what we used to have. And the CAPEX going into finding and exploring these new gold deposits is not there. So not only is it a size concern, we don't have the money to replace even what we have right now. Here is another chart by Crescat, really good one. There were 0 gold discoveries above 2 million ounces in the last 3 years. 0. Precious metals companies are reluctant to spend capital, even though gold prices have reached all-time highs. So they did reach all-time highs earlier this year at about 2070. Right now, they're in the $1,900 range. That's still near the previous all-time high in 2011. So we're still doing very well in terms of gold prices. You can see as the gold prices blew through 2000 this year, the overall discoveries of ounces have fallen off a complete and utter cliff. In fact, when gold broke out is exactly the time in 1990 when gold broke out into its new bull market, when overall the amount of gold discoveries fell at the same time. So part of the issue is that as gold prices rise, current gold production gets more profitable, and you would think that they would spend that money on additional discoveries, but they're not doing it. As you'll see here, exploration budgets and gold prices have been diverging for over 8 years. So since the last peak in gold price in 2011, and this is something I've talked quite a bit about, I brought on to my channel twice, Kai Hoffman, who runs Orn Inc., which tracks all the Canadian resource investment. He has an index for that. Go to Orn Inc. for that if you want online. He's been telling us since 2011 it's never recovered. The exploration budgets have never recovered. And you can see that by the blue line. As the gold price has recovered, the exploration budgets did a small recovery between 2015 and 2019, but have fallen off. So they've never reached its peak in 2011. So if we don't have those exploration budgets, we're not going to find those additional ounces. Last chart for now, and we'll come back to this report here in a moment. Miners have been reluctant to spend capital, even though gold prices have been moving higher. Thus, supply is constrained. An incredibly bullish fundamental backdrop for gold and silver. And you can see the divergence between the price in the white line and the aggregate annual CAPEX, or capital expenditures for exploration and development, that have fallen off a cliff. And that is a concern. Now, if you happen to be a gold enthusiast, whether it be the bullion or the stocks, this is incredibly positive for you. I wanted to get into a research article done late last year by Munknee.com, spelled Munknee. The URL is up here if you guys want to enter that into your bar and follow along. They did a physical gold versus stocks, which performed best in a recession. I'm going to scroll down. Now, they do have an interesting chart here, noticing you'll notice real quick the S&P 500 return versus the gold return during recessions. Gold almost always does better, with the exception of November 28, 1980 to August 12, 1982. But outside of that exception, gold outperforms the S&P during recessions. I think all of us gold bugs or gold enthusiasts know that. But I wanted to get to the gold stocks. So during the crash, during January 08 to December 08, gold stocks did about the same or slightly worse than the S&P. So in other words, a lot of people ask me, Rob, if there's going to be a crash in the stock market, should I be investing in gold and stocks? Well, if you just look at the crash period, the initial thrust of the crash, the initial inertia of the crash, no, because why? Because people need liquidity. So they're going to sell out of the gold stocks, their gold bullion. They're going to sell out of everything looking for liquidity, especially big hedge funds and big players. Now, a lot of us individuals may not do that. That's the time we're going to buy. But in terms of the paper products, the stocks, the ETFs, the futures, they're going to sell. They're looking for liquidity because they're getting margin called on their other investments, and they need liquidity because they're worried about being able to pay debt. So that's why the initial drop, the gold stocks go down during initial stock market crash, but they recover. So since January 09 to September 2011, when gold, about the time gold reached its peak of around $1,900, the gold stocks, as represented by the GDX, soundly outperformed the S&P 500. The S&P came in at about 25, 30%, whereas the gold stocks came in, they doubled over that time frame. That about 2 3/4 years, they doubled. Why they double? Because the gold price is going up because people flight to safety. That creates additional revenues to the gold miners. And every dollar that gold goes above the price, their cost to mine is pure profit on their balance sheet. So that's why the gold stocks tend to do better in a recession after the initial drop. So you see this initial drop, you see it reach a bottom here. This is when you want to start buying additional gold stocks. That doesn't mean sell out of the ones you have as it's going down. You can dollar cost average back up if you want and look at the increase. You're going to get that 100% increase. So they went down about 60%, but then recovered to over 100%. And that is pretty typical of most recessions. There's another chart here that they're showing, which talks about some of the majors. So Rand Gold, Kinross Gold Corp. And this is between March 2002 to October 2002. This is sort of like after the tech crash. You had the S&P, returning a negative 25%. Kinross was up at one point 150%, but ended up 75%. And then Rand Gold and Gold Corp are both up over 25% during a time when the S&P was down 25%. So the gold stocks tend to do well. Even the majors tend to do well when the overall market is crashing. Why? People flight to safety, gold and silver, and that's why those stocks will do well. I'm going to blow this chart up just a little bit. It's a really good one. Let me move this up a little bit. So this is crisis and post-crisis performance. So during the tech bubble, the S&P crashed 42%. Physical gold went up 21%. Gold Corp went up 325%. Barrick was down 9. Newmont up 14. Kinross 26. Anglo Gold and Agnico Eagle both up. The recovery period, S&P went up 61%, and all the rest of the stocks did just as well. Agnico Eagle did 256, 159. So during the crash, the gold stocks, especially physical gold and the gold stocks, tend to do very well. And they tend to do well also during the subsequent recovery. During the financial crisis, October 2007 to March 2009, the S&P fell 56%, and it recovered 98%, but physical gold did 23 and then 33. Gold Corp, Newmont, Barrick all fell a little bit, but then they recovered somewhat, and then Agnico Eagle. So they were still a little bit down the recovery period, but overall, the gold stocks during the last financial crisis, while they sold out, didn't do as badly as did the rest of the market. So overall, from an overall perspective, the gold stocks will do better during times of crisis, and so will gold than will the S&P. So to answer your question, yes, it's good to own these when you're having some sort of recession or crash, or when the stock market's receding. But what you have to do is you have to time it. You're going to have an initial drop, and then you're going to have it go up. And these are covering some of the majors. Some of the juniors could be 10 baggers, 20 baggers. You could really hit big on some of them. Now there's risk because not all of them will do that. So you have to diversify and get more than one. But a lot of the juniors can do even better than some of the majors during a crash because of that flight to safety and the fact that they're juniors. And so relatively speaking, there's not as many stockholders. So when people go onto them, they really tend to explode, and they're really highly leveraged to the metals prices. So where are we right now? The next question to answer, and the final question for this video, where are we right now, January 2021, in terms of valuation of some of the major gold indices, gold stock indices, when compared with the S&P? So here I have graphed the GDX, gold miners ETF, against the S&P 500 large cap index. You can see that it's been decreasing. So because we're on top, we have the GDX, and on bottom, the SPX. When this goes down, it means the SPX is higher valued over time relative to the GDX, meaning the S&P has increased much more than the gold miners, the VanEck Gold Miners ETF, which is representative of a lot of big popular gold companies. Meaning, relatively speaking, the gold miners are undervalued to the S&P, meaning when we have our next crash, what's going to crash more as a percentage? The S&P, and probably the Dow Jones as well. If I graph the Dow Jones, it's probably a very similar, because the S&P and Dow Jones have risen almost in lockstep, which I've shown in charts past. So what's going to happen is the stock market indices, the popular broad stock market indices, are going to crash a lot more than the gold stock indices, and the gold stock indices are undervalued relative. So when you have that money, the flight to safety, they're going to go up more. Okay, low valuations of the gold miners relative to the S&P. Same thing with the Huey, the gold bugs index to the S&P. It is undervalued relative to, relatively speaking, the S&P, meaning the S&P has risen more, in this global bull stock market. But when the crash happens, yes, the Huey will fall some, but it's going to recover faster and more than the S&P, because the S&P is a bubble when compared with the Huey, and the S&P is a bubble when compared with the GDX. So there you go on the stock market indices. So to recap, we have talked about in 2019 and 2020, our research shows that there've been a lot more fiat created than there has been gold and silver mined, and especially minted into investable products like coins and bars. We have shown that, yes, we have reached peak gold, at least in current terms. We know that by 2030, we're going to fall off a cliff. That is in line with what's been happening since 1900. That's a 130-year trend that has seemed to hold true, thanks to research from Michael Thompson. That means that we're not going to have enough gold in the ground when during a time when there's that flight to safety. And that means you may not be able to find that liquid gold. And you maybe know it, and also the gold miner prices are going to go up quite a bit as well as gold price continues to increase. Are we at peak gold permanently? Well, if you look at the amount of CAPEX spent on exploration and development, it has not recovered since 2011. That's not a positive trend. Unless in the next 10 years, we get an overwhelming amount of CAPEX going into gold discoveries and silver discoveries, we're not going to have that next 30-year period where we have a big sizable increase in gold reserves. So have we reached peak gold? People have been arguing this back and forth. Peak gold, not peak gold. For yes, now, based on the data, we have reached peak gold. Could we recover? Only if we dramatically increase our CAPEX. And according to research, we're not going to find another Witwatersrand. We're not probably going to find another Grasberg. We're going to find a bunch of medium to smaller deposits that are going to require higher gold prices to be profitable. Will we ever get back to that mine like the Witwatersrand, which produced a thousand metric amount of gold a year? I don't know if we'll ever get back to that. It's been 50 years since we've seen that. And so peak gold, probably, at least for the next 10 years, probably beyond that, because we don't have the reserves to back up the next 30-year cycle. And we don't have the spending to find the next reserves. And everybody's been reporting we found the biggest deposit, the biggest, cheapest deposits, unless there's something in Siberia or the Antarctica, which we haven't found, I mean, I guess that's possible. Of course, it's going to be expensive to mine there because of the inhospitable conditions, a lack of infrastructure. So have we reached peak gold? From a practical perspective, yes. Could that turn around the next 10 to 20 years? Yes. When do we have to start spending for that to turn around? Like yesterday, and it hasn't happened yet since 2011. And further, we're not going to find the big deposit. So there's going to have to be a lot of companies doing it. What does that mean for you as a gold investor? What it means for you as a gold investor, lots of money, less gold produced, gold value goes up over the next 20 years. So does silver, especially as we hit our next recession. What does that mean for investment? It's fine to have investments in the majors. I'm perfectly okay with that. Look for the exploration and discovery companies that are finding good gold deposits in tier 1 and even tier 2 districts, because they're going to make a mint, because they're the only ones that are going to have the next set of gold reserves that we're going to need over the next 20, 30 years. And that's where you're really going to make your money. Now, not every one of those is going to be profitable. Not every one of those is going to be a success. But if you find good run companies in good districts that have really promising projects and they have good ownership and good leadership, but chances are you're going to do well overall. Those are the criteria that you want to use. So I think we've answered the question. I think the gold stocks do better than the S&P during times of recession. That's clear. Gold does better than the S&P in terms of recession. Yes, there's an initial drop, but it goes up. But we're in a super mega gold cycle. And therefore, when you add in the lack of reserves for the miners, a super mega gold mining cycle for at least the next 10 years as we hit our next recession. I think that's very bullish for you guys. Hopefully I've answered the questions. A lot of you guys have emailed me and asked in the comments. I think this does answer the question. If you have further questions, put them down in the comments and we'll do a follow-up video if needed. Until next time, guys, this is Rob Kientz at goldsilverpros.com, wishing you a very happy, profitable, and safe new year in 2021. Thank you.